record. Right, Vandile, how's it? I hope the
I'm
festive,
good.
sharp. I hope the festive is treating you well. Uh, I'm just gonna show you some few twitches, something that I grabbed along the way. So what I realized was that most of the time, people get caught out on the smaller time frame, right? The smaller time frame, I mean the daily and the 4 and the weekly. So now what we're going to do basically, we're just gonna start from the monthly. Ne? We're gonna start from the monthly. So when you start from the monthly like this, you're just going to do the same thing that we used to do. You're going to outline the outer structure. So when you outline the outer structure, what you need to do, the important part now, the new important part is that you need to just find the latest two lows or the latest two touches. That's what you need. And then here at the top also, you will outline your outer structure. So if you have outlined your structure like this from the monthly, now you know that, okay, sharp, from the bigger time frame, we are going up. From the biggest time frame, that is the monthly, will be going up. So from there on the monthly, now you can just try to identify if there are any patterns inside here. So you'll find a pattern there. So you can see that's a pattern. We had this impulse, we had a correction down, and then there it had a reversal formation, and then it reversed. And then after here, we had a correction. And then now what we need to do here now is just to come here and highlight or your latest two touches, which is this one. So you had this impulse, and then now we have this correctional move. So that is your latest two touches. So when you have this, when you have structure like this, you can just leave this structure as it is, and be able to just come and take trades each and every day. Because you already know that, okay, sharp, in the long run, you are looking for this upward move to the upside, right? So now from here on the monthly, again, we want to focus on recent price action. So for us to focus on recent price action, you just go to the weekly. Just look at how the structures are not changing still. You just go to the weekly. So from the weekly, you can see we have 1, 2, we have 1, 2. We know that we can still get the third touch here. And we can still get the third touch. So now here on the weekly, what we're gonna do now on the weekly, just going to get our trend line. And then from our trend line, we're just going to highlight our trend, né? Or our structure. So what you can see here is that we had a move which was moving on an upward trend like this. I want to remove this. On an upward trend like this. And then when this move got here at the up of the trend, it broke out. You'll think that maybe it's a breakout, but this is not a breakout that you can say that the move will continue to the downside, because this move broke out in the form of a what? Of a correction. So there is no progression, right? So if there's no progression, then what you basically have to do now is just to extend your trend line. You extend your trend line, and then you just take it to the latest two touches. Take it to the latest two touches. So this will be your new trend line. And then this will be your new structure like this. This will be a new structure like this. So from this structure like this, now what you can see is that, okay, we had this impulse, this correction, the impulse, the correction, the impulse. And then now you can then identify that, oh, okay, this is just a correction. This is just a correction. So if I remove this for the sake of us to just see that structure, because we have already know where we're going. So now you can already see, oh, okay, this is just a correction actually. So if this is just a correction there, you will be waiting for your 1, 2, 3. And then, mind you, this is happening on the weekly. Ne? It's happening on the weekly. So on the weekly now, you have this correction here. Now, you have this correction, and you know where we are headed. You know where we're headed. You know that, okay, sharp, this correction is going to the upside on the long run. So here on the weekly, what we're going to check for now, we have this 1, the 2, and the 3 touches. Ne? We've already completed this structure. This structure is completed here at the bottom. So what will be left for it is for it to get out. So this was our confirmation. One thing that we need to check for, or one thing that you need to learn. I'll send you working. I'll send you some pictures, or yeah, I'll send you some pictures on important candles that you need to know. Now, we don't really use candlesticks, but there are some important candles that we used to know, that you need to know. So a candlesticks like this is a reversal candlestick like this. It's a reversal candlestick. So we know that, okay, sharp. Now here, when we get to the bottom, we got this tweezer bottoms. We got these tweezer bottoms there. And then after that, we got a high test candle, right? We got a high test candle, which shows that the market will be ready to reverse. Yeah? Then we get the bullish engulfing. After that, we get the bullish engulfing on the weekly. So on the bullish engulfing, this confirms our buy setup on the weekly. So from here, I'm just going to drop down to the daily. So now here on the daily, there's nothing much that you're going to do. You're just going to adjust your trend lines. You're just going to adjust your trend lines like that. So you don't need to do a lot on the daily. So you adjusted your trend lines like that. So this is what we have now on the daily. This is what we have on the daily. So we had this impulse, and then we have this correction. We have this correction. So this is the correction. Okay, that's the correction. And then from there, everything becomes clearer now, because you know where we are going. We are going to the upside. So if we're going to the upside now, here on the daily, you can see how this market was moving. It was impulse correction, impulse correction, impulse correction, impulse correction, impulse correction, and then impulse correction, impulse. We're expecting a correction, impulse. See? So already you can see how this market is moving here on the daily. So we can't see these corrections. We can't see these corrections here on the daily. But if we now go to, when we go to our 4 hour now, when we go to our 4 hour now, here on our 4 hour now, this is the one that I analyzed the most. This is a recent. Man. Oh. Shit. This, I forgot. But this is what I analyzed. But then, okay. Anyways, let's continue. Let me remove this because this was not there. This was not there. This was not there. This was not there. Okay. Okay. So this will be our 4 hours. So here on our 4 hour, what we can see now here on the 4 hour, what we can see now here on the 4 hour, we can see how the market is moving. It's moving down in a very corrective way. So here in the 4 hour, what you're just going to do now, you're just going to take your structure like that. So from the highest there, and then you have the bottom structure like this, from where this correction started. It's like this. So we had this move going up like impulse, and then it just corrected to the downside. It just corrected to the downside. So this was the correction. This is the whole correction. Actually, this is the whole correction of this move. So from this correction, what we can see now inside this correction is that we have an impulse, we have a correction, These are things that we can see. So on the 4 hour, this is what you look for. Or on the 4 hour, this is what you look for. You just look for these moves. So this was going to be your entry here. When the second, if you're going to enter using the H4, when the second H4 candle closed, when the second H4 candle closed here, we had the green and then the second one closed there. All right, that was going to be your entry. Let me just take this out. Okay. Then we had this impulse, and then we had we had the impulse, and then we just had this correction. And then what we can see now is that from here in this correction, this move formed a pattern. Here in this correction, it formed a pattern. So this pattern that we can see that we have like a double bottom pattern. We have a double bottom pattern, and we know that a double bottom pattern is a pattern for reversal, right? It's a pattern for reversal. And then when we look at the outside structure, we can see that we are at the third touch. You're going to be building the more confluence. We are at the third touch of the outside structure. We are at the second touch of the outside trend line of the weekly, right? And then after that, now at the bottom of the structure, we have a double bottom, right? We had a double bottom here on the H4. This is a double bottom. And then if you look closely inside this double bottom, this is the overall double bottom here. This is the overall double bottom here. So inside this overall double bottom, you've had double bottom. We've had a lot of touches there. Okay. So this was the first double bottom here. And then now with this one here, it just confirms that, okay, we had a double bottom and we are ready to move to the upside. And then now your entry confirmation for the buy. Your entry confirmation for the buy was here at this candlestick, at this candlesticks here. So when this candlestick came here, it gave us a low test candle. This last H4 is called a low test candle. It gave us a low test candle. After giving us a low test candle, it gave us some sort of a hammer sort of structure. And then after that, you see, there we go. It engulfed the previous low test candle. So that was the confirmation. That was the signal confirmation. And then from here, we had this impulse, and then we had the correction, the impulse, the correction, the impulse, the correction, the impulse, the correction. And this correction broke out of the overall trend line. So now we are what? We are impulsing. Okay, so on the 4 hour, basically, you're just going to be looking for those impulses and corrections, impulses and corrections, impulses and corrections on the 4 hour. So from the 4 hour, if you can just drop to the 1 hour, if you can drop to the 1 hour, this is what you'll see. This is what you'll see. So this is what we had. Impulse, correction, so when you look at this, it gives you a lot of entry points, because you could have entered here, you could have entered here, you could have entered here, you could have entered here. And then now on this horizontal ray here, I put this horizontal ray here. We had an impulse, we had a correction. So where I have put this horizontal ray is because there is a possibility that when the market gets here, it might reverse. So that's why this horizontal ray is here. You remember I once sent you this other screenshot saying the previous highs, how to draw the previous highs. So like this from here, as you can see, let's start somewhere here. These were the previous highs. They got broken, right? And then the trend changed. And then from here, if this move was coming here, these are the previous highs. And then this move goes here, this is a double top, it went down. And then we move now to this other previous highs. These are the previous highs again. Then this move from here now, it came up, double top, it went down. And then now from here, we have another previous high. So we don't know how it will react. You just look at the candlesticks and where the market is. So now when you look at this previous high, the market is outside the structure. We're in the impulsive phase. So it means that whatever is coming here will just be a correction move. Okay. So it means that whatever is coming here will just be a correctional move to the downside and a continuation. Just that we don't know how deep this correction will go, but we will be anticipating a correction more or less like this, the small ones that have been happening here. So we'll be anticipating this correction. And then the third touch, of course, will be here somewhere there. And on your left-hand side, it will be at your order block, your third touch. So that's just basically what we do. Like from here now, I mean, if every day now you're going to be trading, it means if you didn't catch this sell, this buy position here, if you didn't catch this buy position here, like this, because the entry is immediately, you have two options here. Let me show you some. Let me just zoom in. Let me go deep into entry. You have two options here. So the market came down. You can see the market came down impulsively. So, and then from here, it starts to show us signs of, this was a sign of a continuation actually. But then from here, now we had this bullish engulfing, which starts to say, oh, okay, we might be getting a reversal, right? Then from here, we have this double bottom. We have this double bottom, and then we have this bullish engulfing. So if you check this bullish engulfing on the smaller time frame, this is just an impulse, and then this is a correction on the smaller time frame. So if I can go to the smaller time frame, let's say, let me just check, maybe the 5 minutes. Where are we? Okay. So this is what it is on the 5 minutes. So it's like this. We have this impulse, and then from here we have this correction. We have this correction. So this, and again on top of that, we have this as an inverse head and shoulder formation, right? You can say this is the left shoulder, then this could be the right, even though it did not break this low, so it can still be the right shoulder, right? And then again, it's a what you call W. Yeah, I see a W formation again. If I start it from here, I could see a W formation. Then from here, we just correct it. So there's nothing much really. Let me just go to one last pair. Back test. Back test, back test, back test. Okay, let me just, this is what, 2018, 2019. Okay. So because what I realized is that if you start on your highest time frame, if you start on your highest time frame, things become easier, way easier. You start to see things that you didn't see in the past, like things become way easier. So this is what I have. This would be my outer. This would be my outer on GBP JPY. So I'm just gonna keep the bottom trend line, because here the top, it doesn't make so much sense. So I don't have a top trend line. I don't want to put it like this. Okay. So I'm gonna go to the weekly. So from the weekly, of course, we have this impulse, and then this for us is just a correction. And then we had this. So using our strategy, now we have this top, and then we have this as the 90%. So from here now, this move, we had this correctional structure. Then from here, we're expecting, you can see we're forming lower low and lower lows, lower lows. Then from here, now we just find more evidence to see what is happening. So from here, that's how the move is going. So this is when now you can decide to say, okay, this move or this correction is supposed to correct all the way to the downside, right? But you can see that it's moving in the form of a correction and in the form of a descending structure. So, and you know that in the descending structure breaks to the upside. So you want to check inside this descending structure how the market will be moving inside that descending structure of yours. So usually the last part of the descending structure will show you the next move of the market. So the last part of the descending structure will show you exactly what is going to happen. So if your last part is impulsive here, then you know that the move is most likely to go up, right? But if it's, of course, like what we can see, let me just take this out. The market becomes easier, I mean, like what you can see already here. This is what you can see already. So as much as this is your descending structure, but looking at the last part, look at the last part. This is a correction, and this correction, this is 90%. So it's most likely that this move will just give us a correction down, correction complete, and then after a year maybe, then we can get a move to the upside. If not, then we'll get a third touch, and then here the third touch, it will come correctively and then go up. So now let's just drop down to the smaller time frames. So I'm just going to go down to the daily. So here in the daily, this thing was moving nice because it was moving in a channel. It was moving very nice. So here in the daily now, what you can see is that, okay, sharp, we have this. I had drawn this previously. This bigger correction. So we can see that this move was just impulse correction, impulse correction, impulse correction, impulse correction, and then impulse, just like that. So from here on the daily now, we have this, and then we have this breakout. So we can see that we have the impulse now. You're just going to find these small ones. Now you don't look for a lot of things. Now you're just going to find these impulses and correct. We're already in the impulse. So now you're just going to find this correction just to try to find an entry point. So for you, you need to find an entry point on the correction. You cannot enter on the impulse. So this will be much clearer if we go to the, let me just do this first. Okay, now let's go to the 4 hour. So now on the 4-hour, it's even much clearer. What we have done on the daily is even much clearer now on the 4-hour. We have the impulse. We're just going to neaten them up now. So this thing needs patience. Like, it needs patience. It needs patience. You need to, like, to wait out the moves, you know. You can't just jump in, you know how we do. So here I'm just drawing in the corrections. So for you to see these corrections also, you don't doubt yourself, because once you see it, you can't unsee it, guys. Once you see it, you can't unsee it. So don't doubt yourself. Once you say, hey, this is a correction, but then you enter the opposite, you knew that that was a correction, but you just decided to enter the other side. So here, this is how the move is moving. Impulse correction. So look at the entries. There are multiple entries. So here, that's the correction. So it goes to the 1 hour. It's ugly. It's very ugly, but that's how the market is. When it's ugly, we need to trade it ugly. This one is a running chart. So I'm just going to adjust, So it's okay to adjust your structures along the way. It's okay to adjust your structures along the way. Okay, because as you are moving along the way, as you are zooming out into the smaller time frames, you can start to see even much clearer. So when you have adjusted, you have your impulse, correction, impulse, correction, impulse. And then here we're just having a correction. So if you're going to enter this move here at the top of the structure, you see there are your two, that's your confirmation there. It's there. See, the one that I'm always talking about, it appears a lot, this one. It appears a lot. So if that was our confirmation, we'll be looking to short. We will be looking to short this market. We'll be looking to sell this market, and we will want to sell it to the downside. Would want to sell it to the downside. And this downside, again, we have this third touch here, and then we would also hope for the market to drop all the way to here. Let me just go to the daily. So we also hope that the market would drop all the way to, if it breaks here and correct, depending on how it moves. Depending on how the market moves at that point of time. So if you can be able to, like, just see, just like that, pause. So now, if I go to the 4-hour, let's take a look and see what happened. Where was, this is us. So this is the move that happened here. So boy, look at this. Look at how beautiful this is. So when are your entries here? Your entries here your stop loss is up here, somewhere up here at the top of this structure. 30 pips at best, 30 pips. Your first take profit, like I said, your first take profit is here. That was your first take profit, 14.93 risk to reward. And then from your this was your second take profit, of which the market didn't really get there, but it pushed out. So from here now, what you can do now, I'm just gonna adjust this. Let me just leave it as it is. Okay. So now that this pattern is complete, we have the impulse, the move started again going up. We just observe. You just observe the patterns that are happening. So you have a pattern. There's the impulse, there's the correction. So after this, we expect that the move will continue to the upside. So all these patterns will always appear. They will always appear. They'll always appear. They'll always appear. It's just a matter of being patient and waiting for them to come out. Because as you can see, this move will not just go up there. So it's just impulse, correction, impulse, and these moves, we will get to see them on the 4-hour time frame, the smaller time frame. So on the 4-hour time frame, instead of just trying to find, because one thing I realized was that mostly on the 4-hour time frame, you wouldn't know what to do. You'll just be finding a channel or a structure. But on the 4-hour time frame, basically, you just need to be dissecting each and every impulse and correction that you can see in the recent market. So on the 4-hour, you just be dissecting each and every impulse and correction that we see on the recent market. You just dissect it. That's basically what we do on the 4-hour. You just dissect. And if the move is happening, it's happening. So even if it's like this, so now you can still stay. You have this, you have the bullish. This will be the first take profit, of course, here at the top of this, and then up there. And then a stop loss will be below this candle. Below this candle. So if we continue to play this, it hits stop loss, took us out. Okay. Then it went into profits, which is fine. So if you look at this, if you look at this, what happened here? It happens. You see, this happens, it happens a lot. And it doesn't mean that your setup was incorrect or you must doubt your next setup. Because if a move, but for me, if this move personally was like playing around like this much here, I would have went out. Okay. But this move here, what we would have done, would have tried to adjust our trend lines. So we would have seen these moves. Would have seen this move. Would have seen it. So this is just a bigger flag. It's just a bigger flag, and the entry was actually here. So it took us out here, which is fine. Then this is just a bigger flag. Still have the impulse, the correction, the impulse, the correction, the impulse, just like that. You see? So once you know which phase you are in the market, that is when we'll get the edge. So it doesn't matter which market that you're trading. This can be applied in any market. It can be applied in any market. It doesn't matter which market you're trading. It can be applied in any market. Any market. So once you identify once you have identified those structures, you see, just that now I'm no longer in entertaining currencies that much, but you see, we have this, still the same thing. We're just waiting for this to break to the downside. Then we have GBP USD. This was the setup that I did yesterday on GBP USD. This was the setup. So already, you see, it's just a continuation of what's already happening. So I didn't enter this. I didn't enter this because so New Zealand USD Leon is still fine. USD CHF. Yeah, I was playing for this move. I was planning for this move to go to push to the upside on USD Chief. I'm actually waiting for a push to the upside. We'll see how it plays out. So for this one, I was skeptical because there's a possibility that we might get first touch here and then go up. So I was a bit skeptical. So other than that, there's nothing much. Yeah, that's it, Bandile. That's what I wanted to share for today. That's what I wanted to share for today.
Yeah,
So
I can see.
yes, so you can
Yeah, I'm
just
saying all of it. Oh, you were saying?
no, yeah, you can just go and try to practice and backtest using a few pairs. So as you can also see, now is December time. So even my watch list, there isn't a lot of pairs. See, this is the red list. I have like 4, and then on the green list, I have like 2. So there isn't this one killed. But this one also, I realized as I was back testing why it killed here. Let me show you something. Remove. I realized why it killed because basically this move is like this on USD JPY. USD JPY is like this. On the outside, this is what we have on the outside. So as you can see here on the outside, we still have the 1, the 2, and then we still have to get to the 3 and then go up. Then from here, if I can just take this out, take this back. We have a move like this on USD JPY. So it can either be here at the top or yeah, but then we have this impulse correction impulse. So we're waiting for the next impulse. And this next impulse, where is it happening? It's happening here. It has started to happen. And it has started to happen on the monthly time frame, mind you. But on the weekly and the daily, we're not going to see this one. So this is what is happening. So if I can just take this back now and then put this horizontal ray here where this correction started, and then already I can see we had an impulse correction. We had an impulse, we had a correction. And then we had this impulse. And then this here is just a correction. This is just a correction. So if we go to the daily, we're going to adjust our trend lines nicely. So if we go to the daily, this is what we have now. So this will look like it was going up, but actually we had this correction here inside, where this correction inside a correction. So this was the impulse, the correction, the impulse. And then now what we can see here is that we have, or we are forming what? I thought it was a head and shoulder, but it's not a head and shoulder. This is what USDJPY does. I've been back testing it also. This is what it does. It gives like these formations that look like head and shoulders, but they're not head and shoulders. So this is just an expanding triangle or an expanding structure. It's an expanding structure, so it's going to continue going up. So from here, we just said this was the correction. We had a correction here. We had a correction, and then the impulse, and then the correction, and then the impulse, and then the correction, and then the impulse. So if I go to the 4 hour like this, this is actually what is happening on USDJPY. But I back tested it and I also forward tested it. So this is what is happening on USDJPY. Impulse. And then this is the correction. Then there's the impulse. And then there is the correction. And then we had a correction here, which is the one which gave us this beautiful, beautiful impulse. So the target, next target is here. So you can see it's just complicated, but once you can see it, once you can see it, you can uncomplicate it. Once you can see it, you can, because this structure is weird, man. This structure is weird. It's December style structure. This structure is weird. Like, how do you can't even see where look at the spikes. Can't even see where the impulse is, where the correction is. But once you see this whole impulse, this correction, this mini impulse out, this correction, this impulse, this correction, you see the higher highs here that the market is forming. And then here, see, that's what matters. That's what matters. All right. So all in all, just take it for practice. And then when January starts, we're going to start it with a banger, because when January comes, a lot of moves are going to be happening, because also this one, a lot of moves are going to be happening on January, because here on USDJPY, I still have a third touch that is owing me here at the bottom, still owing me a third touch. So by January, I'm sure it will be completing this or completed this, and then we'll be going down. So that's where we'll be going. So now we'll just be monitoring and watching. Yeah. Okay. Yeah, now the speed there has reduced, but it's fine, because we have done most of the work. We've done most of the work, so all is well. So if there's anything else again, just go and practice. If there's anything, just let me know, and then we will attend to it.
Okay, I'll do so, no problem.
Sharp. If you have any questions, do you have any questions based on what we just did now?
No, I think I just I've grasped most of the information you said. All I'll do is just recap on the video as well when you send the after you've saved it, recap on the videos, and then also practice on one of two pairs to what you just said. Then if there's anything I can't understand, then I'll just ask you. But at the moment, all is well.
Yeah, because I'll also send you this Falcon material. Where's this? I wanted to this. See this. This is what I want you to have because what I realize is that these candlesticks, they play a very important role. So once you get to read, and it's not a lot of them, I think it's about 7 or 8 that we use a lot. So you don't need to know a lot of candles, say what, just a few. You just know that there's a continuation and then there's a reversal. Just a few. So I'll send this file through also.
Okay, sure.
Sharp.